There are no properties on the market. The interest rates are gonna skyrocket. When are more properties gonna be built? Inflation is gonna bring prices down. As a real estate professional and investor, I'm hearing these questions all the time. So in this video, I'm gonna answer all of these concerns and questions that you may have. Whether you're looking to purchase your first property, second property, maybe you're upsizing, downsizing, or you're just looking to get the most top dollar for your property right now. Perhaps you're an investor thinking, is it the right time to buy? Is it the right time to refinance your property? Well, this video is for you. I'm Gia Silva, your trusted real estate advisor here in Long Beach. And if you're still watching this video, you may perhaps be feeling a little bit anxious, confused, maybe even paralyzed as to what to do this year and in the years to come. Well, I'm here today to lift the curtains and give you confidence and clarity to make the best real estate decisions for yourself. So let's dive right in. Now, the main thing I keep hearing is the real estate market is going to crash again. Property values are gonna tank, interest rates are gonna rise, and we're not gonna be able to afford a property. Now, before a crash actually happens, there are a lot of factors leading up to that crash. Now, before we discuss the factors that may cause another crash, let's analyze the factors that led up to the last crash. Do you remember 2008? Let's discuss the years leading up to that crash, 2005, 2006, 2007. If you recall, those were the years that we were building properties year over year. 1.5 million properties every single year. Also, people were cashing out like crazy. Homeowners were tapping into their equity and using it like an ATM. And banks were literally giving loans to anyone. If you had a pulse, you would get a loan. And just like with every market cycle, there was a correction and not many people had equity. So now they were upside down, owing more on their property than the property was actually valued. And investors' concerns caused the stock market to crash. Now, fast forward to 2022, the stock market is struggling. Buyers are having concerns that interest rates are going to rise. They're actually questioning, are we even gonna have more inventory coming on the market? And inflation's increasing. Now, I know there's a lot of voices out there saying these may be indicators of another crash, but are they? Now let's analyze the numbers and go through the factors that may or may not cause another crash. First and foremost, here's the biggest difference of the years leading up to a crash. If we remember 2005, 2006, 2007, I mentioned that people were using their equity like an ATM, right? Well, now, today, did you know that about 50% of homeowners actually have about 40% of equity? So, sounds like homeowners have learned their lesson. Since the crash, lending has tightened their requirements and also their programs, making sure that people are not going to default again. Now, we've been stalled by the supply chains in building and building more properties. However, coming this summer, there's going to be about 1.5 million properties all throughout the country that are going to go on the market, creating more inventory. So in a sense, these indicators are showing us that we are not looking at another crash coming soon. But Gia, what about inflation? That's gonna make properties tank. And interest rates, we're not gonna be able to afford any properties with interest rates rising. And then supply chain shortages, we're not gonna have any inventory. It's not gonna happen. These are not factors that are gonna take us to a crash. However, they are gonna influence property values, which takes us to my next point, home values and appreciation. Okay, let's take a look at this. These are what the major voices in real estate are predicting. They're predicting on average that we're gonna appreciate about 5.2% this year. You wanna know my number? I'm saying 10%. We're gonna have about 10% of appreciation. Now, why am I saying that? Inflation is gonna be at about 8 to 9%. And last time I checked, housing outperformed inflation forever. So now, while appreciation and inflation is of course bringing up property values, let's talk about interest rates. What is going to happen with interest rates? Where are they gonna get to? Now, a couple years ago, we actually got to an all-time historic low of about 3%. And today we're hearing people going, oh my gosh, rates are gonna skyrocket again. So where are they going? If we take a look at the 10-year treasury, we're seeing that it's going to increase by the end of the year. And what follows? Interest rates. So what's gonna happen is that interest rates are gonna go up to about 4% by the end of this year. Okay, but don't freak out. Did you know that in 2018, the interest rates got to about 5%, which at the time was still considered an all-time low. Now, right now, we're at about 3.5%, and the predictions are saying that we're gonna go to about 4%, which, yes, is gonna be an increase to your payment. So if you're trying to lock in that low rate or even refinance with a really low rate, is the time to do it now. However, if you get to the end of the year and it's at still 4%, you're still at a very low interest rate, very cheap money. Now, if you're a homeowner and have been thinking about selling, what is that gonna do to our real estate market? Well, the higher the interest rates, the lower the purchasing power for a consumer. So if today you can afford about $900,000, once interest rates increase about 0.5%, your purchasing power is going to decrease about $50,000. And if you're a homeowner who has been thinking about selling, how are the rising interest rates going to affect the pool of buyers for your property? Well, let's take a look at purchasing power. Purchasing power means that if today a buyer can afford about $900,000, once the interest rate increases about 0.5%, their purchasing power is gonna lower. It's gonna lower anywhere between $50,000 to $100,000. So what's that gonna mean to you as a seller? Well, it means perhaps less offers, maybe not pushing the envelope so much because the pool of buyers that you have now are less than what you had with lower interest rates. That may mean less of a bidding war, less of crazy values being pushed. So that means that if you've been looking to make that move and get the most for your property, right now is probably a really good time. So now we know that more inventory is coming on the market this summer. What is that going to be doing to property values? Well, that means that there's going to be more properties for buyers to offer on as well and have more options. So what is that going to do? That means less multiple offers and less likely for buyers to be offering crazy amounts because they have more options. So in a nutshell, property values are going to continue to appreciate just at a slower pace. So here's my closing argument. Is it a good time to buy real estate? So by general consensus, it is a good time to buy. Low interest rates and continued appreciation. Now, if you're a person that's always looking for a deal, consider this. Whoever purchased 2 years ago has a deal today. And if you purchase today, you will have a deal in a few years. Because in real estate, properties always appreciate. And is it a good time to sell? Absolutely. Now again, it all depends on your necessity and your wants. However, in general, with values the way they are right now and demand, you will get the most for your property. Now with all of that, I hope that this video brought you clarity and confidence to make the best real estate decisions for yourselves. And remember, if you have any questions about your personal circumstance, just know that I am here for you and I would love to be your trusted real estate advisor. If you want to reach out directly, my contact information is down below. And again, if you have enjoyed this video, go ahead and like it, subscribe, comment below, and I'll see you next time.